Welcome back. On the phone with us now is our good friend David Morgan.
David Morgan is the publisher of the Morgan Report, a U.S. expert on precious metals investing. You can learn more at silver-investor.com. David, welcome to the program.
Oh, my pleasure. Thank you.
David, we have, the metals had been falling in sympathy with the stock market, but I've seen 2 of the 4 sessions this week where it broke course and was trading opposite of the stock market, today being a prime example. What's your read into what's going on?
Well, one, volatility, obviously. And I think a lot of it has to do with this jobs report. It has to do with the Eurozone. And it has to do probably with people getting out of the dollar. It could be people meaning nation states like China and Japan, for an example, that might just look at what's going on everywhere and feel the dollar isn't safe. There's been a lot of short covering in the mining stocks as of late. I'm pretty certain that the mining equities have bottomed. Normally, in a bull market, the mining equities bottom before the metals themselves bottom. I'm still looking for perhaps a bottom within this month, sometime in June, but doesn't necessarily make me right. Could have seen the bottom. I really like the action today. Silver was up from the 27.14 level to, that's right now at 28, almost 28.50. So huge move, well over $1. And gold is pushing toward a $1,600 level, made a very similar move. In fact, gold's up over 2%. And these happened almost instantaneously. So something's going on in the trading floor. Something's going on in the financial markets. The Dow is down significantly. Jobs report really bad. Eurozone is indeterminable. And people seek safety, and the metals are safe, although they've been weak, and they've been weak for several months now. The problem is what's really going on behind the scenes. For an example, China increased their gold intake 600% in the first quarter of 2012. So China's, kind of leading the way, so to speak. They're buying more gold than they backed off the amount of treasury debt that they've been buying. So they see what's coming. I think a lot of people in a lot of nation states, a lot of money managers, a lot of people in the stock market, a lot of financial professionals all see what's coming, but they don't really know, what to do about it. So you get these type of days where it's that one thing that sets them off, and away they go buying into the precious metals.
One thing I noticed today, normally when the stock market is down, the dollar is up. The dollar is down today along with the stock market. But regarding silver in particular, we did some buying back in between the holidays when we saw the markets come back under pressure. But we held above that level during this recent sell-off. So I know you had called some weakness, but after that December low, we climbed, we went from, about 26 and some change on some overnight trades all the way up to 37?
Yeah.
You think we're going to see that again in the next couple months, 2 or 3 months?
Well, I'm still holding my position, not only in silver, but my position that I think we'll see 40 by the end of the year. Whether we'll see 37 in 3 months, I'm not too sure. It's really tough in these political environments where there's a lot of emphasis by the Fed to make things look good if they want to keep the incumbent back in office or not. But regardless of that, markets are markets. And no, I think we may have seen the bottom. I want to make that statement first, Alan, as you a very, very good listener of what I have to report. I said that I thought we'd see the 26 level probably 3 times, and that'd be about it. We have seen that. In fact, the last time we hit 26, it was like 26.75 or 26.68, depending on which print you want to look at. And that's the high 26s. The last 2 times was very brief. This one I just reported was very brief, and they bounced back up. So I really think that we could see, the bottom is in the metals as well as the mining equities. And it's not necessarily going to be up and away. There is overhead resistance. There's people that bought in at 30, 31, 32 thinking that was the low, and they're short-term oriented, and it gets back to those levels, and they'll probably off their positions. But there aren't many. Most people that are in the metals have conviction and are long-term holders, because under today's financial climate, the best question you can ask yourself is, where do you want to put your money? Do You want to put it in, a dollar that's depreciating. You want to put it in a bond market that's going to default one way or another. Do you want to put it in real estate that, may or may not be a good investment? I'm sure there's some out there in certain areas that's okay. But the metals are really the safest place you can be in the current environment.
David, do you have a handle or a feel on the percentage of just the average retail investor right now that's taking positions in the precious metals as opposed to the central banks, the financial institutions, some of the bigger players?
Jason, I do, because I check with some of the largest wholesalers in the country. I know not all of them, but most of them. And it's been slack. People don't buy bottoms. I've been trying to get, people that are paid members and for the public at large to emphasize this is a bottom or bottoming. No one could call an exact day bottom, but I'm pretty confident we're here, and step up your buying because this is low. You want to buy a low. You don't want, wait for it to move to make, get in the market again or add to a position or start a position. And yet people don't. The psychology is, well, it's 27 and it's going to go lower. And, David may be wrong, 26, it's going to go, below that. And maybe it will, but I doubt it. The point being that you really got to step up to the plate. And if you think it's in the bottoming process, which I think it is, or, beyond that slightly, it's still low. You want to take a position and add to it over the next few months or several, depending on your how you view the market. And also how you view your investment time horizon. If you're looking to keep the metals for 10 years, then you probably want to average in over, the next 6 months to a year. If you're really going to, accelerate your metals position, you might want to get in over the next couple of months.
David, for our paper bug fans out there, as you named them one time, despite this recent weakness in the metals, silver, for example, is up 6.5% year to date since the beginning of the year. Today's action in the equities has wiped out all of the gains, so the stock market is now in the red on the year, and the metals are actually up for the year. So what's that going to give us, 12 years in a row, 11 or 12 years in a row?
Well, gold would be 12 years in a row. Silver had an off year, so it actually didn't make it every year, although the trend line is still very much intact, and it would be 12 years in a row. Yeah, people don't get it, Alan. I'm really, it shocks me, but I've been a metals head for so long once I understood fractional reserve banking in my late teens. But regardless, I think a lot of people, once you see this kind of movement in silver and gold, if this continues into next week, early like Monday, Tuesday next week, and we see some substantial moves up, I think a lot more people that are on the fence will get off the fence and start buying.
Well, that's one of the reasons I wanted to ask you about the average retail investor, because we've had 12 years, basically, of an upward trajectory in the metals, and...
Go ahead. David, are you still there?
No, sorry. Yeah, no, I heard. I thought there was a question. No, that's right. Well, what happens is markets are very predictable from psychology. People that want the market to be well established, and they're late to the party. Look at the tech wreck. The biggest move in the NASDAQ happened like in the last 6 months or so. I mean, the NASDAQ was really overvalued from almost any way you wanted to measure it. Yet it went really, really much higher very quickly. And that'll happen to metals, too. I don't think we're in that phase of the market yet. We've got to get back above 40 in silver and back above the $2,000 range for gold just to get that base built again. But somewhere in that range, and maybe, $2,500 gold and $60 silver, something like that, there'll be some kind of panic buying, and there'll be more silver bought above 40 than was ever bought below 40. That's how these markets work. People will come in, oh, my God, do you know that there's a shortage of silver? Did you know that silver is used for this? Or did you know silver that? And people will all of a sudden, it'll spread like wildfire, and you'll see this massive move. But we're not there yet, in my view, but we will get there, and that's the retail investor. They're late. They buy highs. They don't buy lows.
David Morgan, publisher of the Morgan Report. You can learn more at silver-investor.com. David, it's been a pleasure.
Thank you very much, Jason.
Thank you, David. Always look forward to talking to you.
This is Butler on Business. We'll be back in a few minutes.